Conie, you may begin.
Yep. Okay. Hi, good afternoon, everyone. I'm Conie Lai. I'm a registered financial planner with FAA Advisories in Berhad. Let me introduce a bit about my background. I have been more than 10 years experience in insurance line. Previously, I was a Thai agent with AIA for the past 10 years. So in 2016, I got my registered financial planner license from Bank Negara. And in the same year, I joined FA Advisories in Berhad as an independent financial planner. So today I'm going to share with you some concept about the insurance planning. Hope you enjoy the section. Sorry, Brian, how to
Awesome.
put the next slide?
Okay, you use your cursor, the next,
Next.
the cursor.
Wait.
Mean the arrow,
sorry.
the arrow,
the
first one, and
Eh?
the arrow key on the keyboard.
Keyboard.
Arrow.
Oh, okay.
Okay, yeah, that's good.
Okay.
No
Okay,
worries.
what
Yeah,
is risk management? Actually, wealth protection is the foundation of the financial planning. So without this base, our financial future can be easily failed and we will suffer financially for the rest of the life. Do you agree or not? So actually, wealth protection is incorporated with a good risk management. What is mean by risk management? Risk management actually, we can choose the risk management decision from choosing between insurance or non-insurance option. Definitely with insurance option, we can transfer the uncertainties risk to certainty, to something that's certain. For example, a house with a fire insurance, we cannot prevent it from being burned down, but we can use the insurance money to construct a new home to replace the destroyed house. So this means risk management is to convert the unpredictable costs and losses to something predictable insurance premium. So in our life, actually, we are facing different kind of risk every day. So as an individual or even business owner, you should watch out three main type of the risk. Number one is the risk of individual self, means this is human risk. Human risk actually including premature death, disability or long-term care, terminal illnesses, medical and surgical bills. The second one is the risk on assets. This is property risk, which include fire, flood, theft, burglary, and etc. Then third one actually is the risk of wrongdoing to others, liability risk. This is more to the business owner, whereby it include public liability, professional indemnity, and etc. Now, let us go through the risk in details one by one. Okay. Human risk. Number one is the human risk. Actually, human risk are directly related to individual or business owner. So there are four main possibilities that happen in our life. Number one is living too long. Nowadays, most people actually they aren't prepared to live long time because through my experience, when I do some retirement planning with my clients, most of the time they just will plan up to age of 80 because most of the prospect or client they will tell me that actually, oh Connie, I cannot think too long, up to age of 80 is enough. So means that actually most of the people they don't know how to cope with uncertainty about the length of their life, and some experts we call it as the longevity risk. Generally, actually, when we increase the life expectancy, means we have exposed to more risk of like disease, risk of disability, dementia at one's age before our death. This means we will financially spend more on the medical or nursing care fees. Do you agree or not? So once people retired, we will lose our income. And unless we have a reliable source of passive income, otherwise we will expose to financially insecurity. So I have an example about my own grandfather. Actually, my grandfather just passed away last few months at age of 99. You imagine he can survive up to age of 99, almost 100. So actually, my grandfather do not have any critical illness or even normal sickness like hypertension, diabetes. He don't have. He's a healthy man. But because of he stay too old already, so old people, all the metabolism will slow down. So actually, before he passed on for the last 5 years, before he passed away, actually my grandfather cannot take care of himself anymore. He cannot perform daily activity such as mobility. He cannot move from by his own. He cannot dress by his own. He cannot eat by his own. Even he cannot go to toilet by his own. He got to wear the pampers. So this is actually uh, in our insurance term, we call it as a old age disability. So even though he didn't really spend a lot on the medical fees, but we do spend a lot on the nursing care fees. So are you prepared for that if we live too long? Okay, so this is one of the risks if we live too long. So the second one is living too short. In the event of a breadwinner premature death, this can cause the financial problem to the surviving family members, since because the family members' income become permanently lost. If the replacement from other source is not enough, or the saving of the family is not enough, because nowadays cash flow to a family actually is quite tight nowadays because of the high expenses. So the family member will suffer financially, and yet they got to suffer emotionally. Okay, so premature death actually that will lead to additional medical bills, additional expenses like medical bills, funeral expenses, or even the legal expenses to the family. Okay, so basically I got another story to share. Is actually my friend relative. He just passed away last year or so at age of 40. So he's the breadwinner of the family. Then he got two children, uh, both study at a private school. Uh, the private school, actually the education costs about 1,000 per month per kid. Ah, so the wife also is a homemaker. Then she never worked at all after married to her husband. So I come across this case because my friend asked me to do some claim for the wife. So but too bad he's not my client. So when we go through the claim, then we found that actually this breadwinner only have one policy that purchased long time ago. Means that actually he never review or repurchase or top up his insurance since the first policy bought. And this policy only worth 100,000 coverage for the family. So it means we only managed to claim 100,000 plus a cash value for the wife. So you imagine two sons, only age of 7 and 8 years old like that. Both also study at private school, and the wife actually not working, have very little or less working experience. So living too short will leave a suffer to the family, because now the wife definitely 100,000 is not enough for the family. The wife got to find a new job for her, and yet it is not easy because she have very less as working experience, and she got two minor children to take care of. So the third one is the disability. Disability actually is obviously very important risk to insure ourselves, even though we do not have any dependents. Okay. However, but many people they actually overlooking on getting this kind of the protection, because young people they may say disability will not happen on me because we are too young. Okay, so people don't understand what is meant by disability or total permanent disability. So I came across an articles that asked for donation or charity, okay, from the China press. A young guy actually he met an accident. He fell down from the motorbike, and this accident hurt his spine. That make him actually, because the spine got injured, so he cannot move anymore. So the rest of his life actually he got to lie down because he become paralyzed. He got to lie down on the bed, and he lost the capability of earning money or to work. Therefore, he also faced some financial difficulties. Therefore, he asked for the charity or donation. Actually, this kind of the scenario we consider as total permanent disabled. So you imagine when a person, they unfortunately become disabled, and yet they would rather die than continue living, and they will face some emotionally and financial consequences that will confront to them. So this feeling can be compounded if he is financially unprepared for such a mishap. So therefore, total permanent disability actually or disability is one of the very serious risks that we would face. Number four actually is the quite common one, is the about the illness. So this illness risk associated with the medical ailment, no matter you are young or old age, we cannot avoid to fall sick. And especially nowadays, our world is so insecure, a lot of virus surrounding us, you see, like COVID-19. Okay, so this is crucial that we get the protection against those hospitalization costs that can result a major or a lot of cash to us, because nowadays the medical treatment bills is very high also. So this is another risk that we got to take care of. So number two is about the property risk. So basically, we are facing some risk of the damage or loss of the property, like houses or vehicles, due to some other causes. So in Malaysia, very common one actually is our property will be destroyed by flood or fire. So normally this kind of the property loss, they will cause a direct loss or indirect loss to us in our life. For example, one house is burning down, then this is called direct loss because the house is burned down. But indirect loss means because the house is burning down, then we claim the insurance, we got to reconstruct the house. Maybe for temporary accommodation, we got to pay extra rental outside. This is considered as indirect loss. So majority in Malaysia, we have two kind of the property risk that actually we can take care of. We should looking into that. One is the immovable property. Another one is the movable property like our car, motorbike, lorry, or even aircraft or ships. So lastly is the liability risk. Liability risk, most of the businessmen or self-employed people, we will face liability risk in our daily life. Because nowadays, public awareness on individual right is very high. They like to sue people to get for the compensation. You see, so many business owner or even individual, we are increasingly facing the risk to lose a large amount of money, or even we might facing bankruptcy because being sued by people. So because of this kind of the exposure, we got to understand our needs and getting protection from this kind of the risk also. So number one is the most common one is the public and product liability insurance. So product liability insurance actually cover you against the injury or damage caused by the item that you manufactured or the item by you sold or supplied. Whereby public liability covers someone who is getting injury or their property is damaged at your business premises. So for example, I have a client, actually they are doing a business, they have a playground center at a shopping mall. So they need this kind of the public and product liability to protect their business in case those clients that actually get hurt at their playground. So the second one is the professional indemnity insurance. So professional indemnity insurance, actually they cover the legal cost of or the expenses that you are allegedly to have provide, because people sue you because you provide a wrong advice, wrong service that make them to lose their money or make them to lose their life, even their life. So most of the time, professional indemnity policy is more suitable to lawyer, doctor, or even financial consultant as us. The third one actually is the cyber liability insurance, which is getting more and more important nowadays. So cyber liability insurance actually cover the cost for the business to recover from the data breach or virus or cyber attack They also cover the legal claims resulting from the breach of data. So, for example, nowadays, I believe that Zoom actually is common to everybody now, right? So, do you know that actually Zoom is being sued by US lawyer because they leak our data to third party? So I believe Zoom they got this kind of the cyber liability insurance. Otherwise, they got to spend a lot of money if the court case was the court case is lost eventually. So we don't know yet. Okay, this is about the cyber liability insurance. Number four actually is the employer liability, which cover the employer to make sure the employer meet the cost of compensation to their employees' injury or illness if their employees are getting hurt or fall sick, whether on-site or off-site. Director, the last one is the director and officer liability. And this insurance actually protect the personal asset of the corporate director or officer. In the event if this director or officer they're being sued by their competitors, by their employees, by the customer, by their own company because they act wrongful in managing the company. Okay, now we know the daily exposure, the risk exposure in our daily life. So we will, in this session, I would like to more focus on the human risk because this is more to individual and that we should take care of first. So we need to understand what type of the life insurance that available in the market before we consider how to transfer the risk to the insurance company. Okay, there are actually 5 types of the life insurance available in the market. Okay, so number 1 is the term insurance. Before that, actually, I would like to let everyone know that actually during this under Malaysia economy stimulus, yes,
对咯，对咯，
okay, under this Malaysia economy stimulus program, so actually our government do allow 3 months deferment premium for all the policy holder. So 3 months deferment premium means that actually we can stop paying premium for 3 months, but at the 4th month we got to pay back total 4 months insurance premiums. Otherwise, our insurance policy will be affected. It being a lapse case or it being under shortfall of cash value or whatever. So I will explain. But beside of this deferment premium, 3 months deferment premium, actually we have other option to take care of our policy. So I will explain one by one. Number 1 actually is the term insurance. Term insurance actually is the getting the greatest protection at the lowest initial premium compared to other type of the life insurance. So term insurance actually carry little or we call it as no cash value, and they provide temporary protection for a period of time. It's not a whole life policy. So normally people buy term insurance because they want to cover for a short period of time, like they want to cancel their mortgage loan, cover for the mortgage loan, for the short-term planning, or even for the key man insurance. So for this deferment premium, term insurance is we got to be very careful because term insurance do not carry any cash value. So at the 4th month, we got to make sure ourselves can pay back total 4 months, 3 plus 1, 4 months insurance premium. Otherwise, this term insurance can be easily lapse case. Then second one is the whole life insurance. Whole life insurance actually is a permanent form of the insurance coverage on life of the insured, as long as the renewal premium are paid. This is a participating plan that involves profit sharing with the insurance company. And the amount of the cash value generated is depends on the performance of the company and face amount of the policy. Normally, people buy whole life policy is for long-term protection purpose or even for legacy purpose. So the cash value generated from the policy is something additional saving or retirement for the policy holder. Like this kind of the whole life insurance, we beside of the deferment premium that we can look into that, if you are really facing some cash flow difficulties for whole life policy, we can even apply for the automatic premium loan for an even longer period of time, longer than 3 months. Or we can opt for extended term assurance. Because of the time constraint here, I won't explain the technical part how to get the FPL or extended term assurance for this policy. So maybe under Q&A or under offline section, we can discuss furthermore into that if you really need to apply this kind of the if you really need to restructure your policy. Okay, so third one is the endowment insurance. Endowment insurance objective actually is normally this is a forced saving plan. The objective actually is for the children education or for our retirement planning. So most of the time endowment insurance, they offer minimum protection, and the policy will expire at the shorter term, let's say 20 years or 25 years. So some endowment policy actually they offer guaranteed cash payment every year, and this can be withdrawn or kept with the insurance company to accumulate interest. So same with the whole life insurance. If we really face cash flow difficulties, we can apply premium deferment or automatic premium loan or extended term assurance for this kind of the policy. So the fourth one actually is the investment linked insurance. This is the combination of the investment and protection element policy. And this is the most popular policy nowadays. Investment linked policy, they offer more flexibility to the policy owner, and they can choose to fix the premium by themselves and fix the coverage period by themselves and even the protection. So for this policy is different compared with term, whole life or endowment insurance. Beside of the deferment premium program, you can even apply for the premium holiday. Premium holiday is different with the automatic premium loan or extended term assurance. And yet, because this is a technical part, we can discuss furthermore under Q&A section or under offline section. So the fifth one actually is the annuity. Annuity is not really popular in Malaysia, but somehow it's some people will mix it up with the endowment, the guaranteed cash payment endowment insurance. Actually, annuity, they provide a guaranteed stream of income flow during our retirement. So now you have determined different type of the risk that you must manage and protect, and you also know what type of the life insurance that actually available in the market. So what is the next? Normally we suggest you to list down the risk and decide whether your risk exposure, whether it's severe, moderate or insignificant to you, whether you can handle it by yourself or not. Ask yourself what if the question. What if I pass away yesterday? What if I live too long, I'm facing old age, I can live up to age of 100. What if I fall sick today, in which I got to admit to the hospital? What if I suffer critical illness today? What if I'm facing permanent disability today? What if my income is being disrupted because I cannot work anymore due to disable or critical illness? Am I able to manage all these, any other financial resources? For example, do I have enough saving or investment to face this kind of the risk, to handle this kind of the risk? And there must be a healthy balance between the amount of money that you can afford to pay for the insurance premium and the type of the protection that you need to get for your family, to protect yourself, to protect your family. So again, we always advise clients that we do not pay more than what you can afford, because life insurance is a long-term commitment. So we will suggest you to balance your money, we will suggest client to have a balanced life. So again, we will suggest that actually you identify your risk exposure and you identify how much of the premium that actually you can afford to pay. So nevertheless, you should take note some mistake while doing your insurance planning. So there are 4 types of the very common mistake that people will make when purchasing their insurance policy. Number 1 is purchasing too little. This is the mistake that actually very common, but this mistake can be potentially more costly to you if you purchase too little of the insurance. For example, since the cost of the medical treatment actually escalate more and more nowadays, you ask yourself, do you have enough medical plan to protect the hospitalization expenses? Because the old medical card used to offer less than 100,000 yearly limit. And normally, old medical plan, they have a limited lifetime limit. This may not enough for the current or even for the future medical expenses. Nowadays, the new medical plan actually they offer minimum 1 million yearly limit and above, and with unlimited for whole life to ensure we have enough medical fund for treatment in the present or even in the future. So actually I have a experience to share that actually my uncle was diagnosed with early stage of nose cancer last year. So called even though doctor tell you early stage, actually is already stage 1, that he must go through all the radiotherapy and chemotherapy. So from the day 1 that actually he diagnosed the lump, actually from day 1 he have the symptom until he get the treatment is only 6 months. 6 months. So day 1 he found that actually there is a lump grow up surrounding his neck. Then he visited doctor. Then he removed the lump, and then he found that under the biopsy test, this lump actually is a cancerous cell, and this is a nose cancer. And then doctor advised him to go through the radiotherapy and chemotherapy. And yet, this radiotherapy and chemotherapy must do every day. Means he cannot work for that 6 months from the day 1 until he died. He get the treatment. The whole total 6 months actually my uncle didn't work at all, and he focused on the treatment. And this 6 month total medical bill cost about 100 over 1,000. But he carry a old medical card because he also never review his card. His old medical card only offers 60,000 yearly limit with 200,000 lifetime limit. Okay, so total 6 month medical bills, he got to fork out 40 over 1,000 from his own pocket. And yet the rest of his life, he only left how many? 200 minus 60, he only left about 140,000 medical claims from medical, 140,000 claims from the insurance company. So this is the event that purchasing too little and never review policy. And yet another common mistake is the breadwinner. They buy too little on the life insurance. Most of the breadwinner in Malaysia, actually they have only less than 100,000 life insurance. If the premature death that happened to the breadwinner, definitely the whole family will have will suffer a lot from the financial point of view. So this happened like just now. What the story that I share with you guys is about the breadwinner of the father. He only purchased 100,000 life insurance that actually is not enough for the whole family. So the second mistake, let's come to the second mistake. The second mistake actually is buy too much and overpay. This could happen. Why people will buy too much? Or maybe you guys will ask. This could happen due to improper or inaccurate need analysis by the insured. Or sometimes the agent never go through the proper needs analysis with the client, especially during year end when the agent need to hit target. So maybe they just ask the client to support and buy some insurance that actually they do not need. So this will lead to buying too much and overpay. So third mistake actually is another very common mistake, which is the absence of the essential covers. A comprehensive insurance coverage actually include essential and basic cover. What is the essential and basic cover? Number 1 is the death or total permanent disability coverage. Number 2 is the critical illnesses coverage. Fourth is the hospital and surgical coverage. And lastly is the personal accident coverage. So throughout this many years, I do a lot of the policy analysis with the client. I found that actually a lot of clients, they miss out personal accident plan. Actually, personal accident, because people don't understand why they need to buy personal accident plan. Personal accident plan actually is covered dismemberment. If a client make accident, they lost one hand, one leg, or even one eye. And this benefit actually will not be covered under total permanent disability. So because personal accident premium is quite affordable and low, therefore I found that maybe many agents, they didn't really propose this PA to the client. So I will suggest all of you should go back, check, review, and analyze your existing coverage. See whether you have all these comprehensive essential cover or not. Then lastly is purchasing an inappropriate insurance plan. This is very common when a person, they misinformed by the insurance agent on the plan that he or she signed up for. For example, an individual, they may sign up endowment plan, but this individual, they misunderstand that actually this is a whole life plan. I met one client, actually he thought he have a lot of he purchased a life insurance that offer him 100,000 death benefit, but this death benefit will expire at his age of 60, because this is endowment plan. But his intention actually is leaving a legacy to the children. Therefore, this endowment policy actually is not what he need. That's why he purchased an inappropriate insurance plan. And there is a possibility that a person, they sign up too much on one risk, but too little for other risk. For example, I see some of the clients that actually they purchase a lot of the life insurance. They cover a lot of the life insurance, but he is not a businessman, and he has a very little debts and no dependent. But this kind of the people, they might need more critical illnesses coverage, because their loss of income risk is higher than than loss of life, because no dependent. That's why sometimes we got to review to see our insurance policy whether really meets our daily needs or daily life purpose or not. So sometimes I met one client also. After I did the policy analysis with him, I found that actually this breadwinner, he's paying 100,000 premium per annum for the whole family. Whole family means her husband and wife and 2 kids. So his wife also not working. So sometimes we will see when we approach them, they will say, oh, I pay a lot of insurance premium already. I have enough insurance. But after I did the analysis, I found that this 100,000 premium, yearly premium, only offer him 800,000 life insurance. Mean if he pass away, his family member only can claim 800,000 from the insurance company. So actually, it's really not enough for the family, for his status, not enough for his family needs. So sometimes we got to analyze and see what kind and what type of the insurance plan that we purchase, and we got to see whether this kind of the insurance plan is really meet our daily life and life purpose or not. Not saying that you are paying a lot of insurance premium, then you got a lot of insurance coverage. Okay. So for this reason, people will ask, how much insurance coverage do I need? So we got to ask ourselves, what is our life stages? Number one, are you married? Because if you are married, you have a spouse, then you got to ask whether you are the breadwinner of the family or your spouse is the breadwinner of the family. Or if both of you actually are working, then the financial formula will be different when you plan your insurance. Then second one is, do you have an income? Income actually refer to asset income, spouse income, business income, employment income. So if your income will affect the amount of the coverage you should get. So, but is it means that, oh, like that I don't need to buy, Connie, because I have no income? Housemaker, they will tell me. This is not the, it doesn't mean that actually you have no income, you do not need insurance. It's just that you have no income, then maybe your coverage need will be lesser. Third one is you got to ask yourself, do you have any dependents? So if you have dependent means maybe your wife is your dependent, your children is your dependent, or even your parents might be your dependents also. So when you have dependents, mean you would have to take care of them. And especially for the worst scenario that if you're no longer around, then you got to see whether you have enough insurance coverage to take care of your dependents or not. So human okay, so now after we ask all these questions, we got to calculate how much of the insurance life insurance that actually we should buy so that we won't overpay or overcovered. So basically as a breadwinner, we got two type of the analysis two type of the method to calculate insurance a life insurance that a breadwinner should take. Number one mechanism is the need analysis method. So this is more accurate and more suitable for most of the breadwinner calculation, whereby we will calculate the life insurance that we will calculate the life insurance that a breadwinner required based on their needs and existing resources. For example, if the family maintenance requirement, they need 5,000 per month, then we got to calculate 1 year maintenance time, how many years that the breadwinner would like to protect his family. For example, why we put 23 years here, because we assume if you have a children, we would like to raise our youngest children up to his age of 23, or he achieve his degree, whichever earlier. Therefore, we put a 23 years in the example here. So if your family need 5,000 a month for 12 months for 23 years, then the maintenance required is 1.38 million for your family. Then we also need to plan education fund for our children. Imagine if you plan to set aside 300,000 for one kid as his tertiary education fund. Then if you have 2 kids, then we got to times 2, total is 600,000. Then we got to, because we would like our family member stay debt free after we pass on. Therefore, we got to calculate what is our outstanding loan. So we got to add on our mortgage loan, car loan, personal loan, credit card loan. So after add on everything, it might be cost about 2 million, example here. Then the total needs required is 3.98 million. But don't worry, you don't need to buy 3.98 million life insurance coverage. It's a huge premium, man. So because we have existing resources, we got to consider what is our existing resources. Number one, do you have EPF? Number two, do you have savings? Number three, do you have investment? Let's say property investment, unit trust investment, or stock investment. From here, actually, we will not calculate, we will not consider the own state property as our existing resources, because we most of the time, we won't plan to sell the property after we no longer around. So whether we have any existing life insurance or not, all this is considered our existing resources. So we got to add up all our existing resources, see how much of the fund we have. Then we minus the needs requirement minus the existing resources. So this is something extra that actually is the shortfall that we should cover for our family member. Then we got another method of calculation also. This method, actually, we call it as a human life value method. This is a pretty simple calculation. This method, we just based on the individual earning ability. So we only look at the present value lost by the dependent as a result of the father mother or breadwinner pass on. For example, this father, age of 40, his capability actually is earning 200,000 annual income. So if he plan to retire at age 55, so today his human life value is 200,000 times 15 years is 3 million. This is a pretty simple way calculation, but we feel that actually this approach, this calculation has its limitation, because we assume this person salary unchanged, and we also ignore the income needs or existing resources available. But it's still subject to the client to see which kind of the calculation that meet more his personal value and personal needs. So from here, okay, why you need to choose our company as your financial consultant to do your insurance planning? Because we have 5C. C is number one, we are certified financial planner. We got the license license by Bank Negara and Security Commission. Number two is we have competence, because I have more than 10 years experience in the industry and assisted more than 300 family members to achieve their financial, to achieve their 5 pillars of the wealth protection. Number three is the caring. We always listen to the client needs and care, and we provide feedback and assisting to the client to achieve their needs. Number four is the compliance. We compliance to the authority and ethical. And number five, the compensation. Our compensation is based on the engagement, and we hope the client is happy with our service. Because as an independent financial planner company, actually we represent all the insurance company. Therefore, we can become unbiased, professional, and independent. We will provide the metric solution to the client rather than just sell the product to the client. So we will listen to your needs, we analyze your needs, we provide solution to your needs, rather than we are not product driven as the Thai agent in the market. So lastly, actually, I would like to share you a unforgettable experience throughout my career path. Actually, in the past 8 years, and I think it's about 8 years ago, I got a client. So this client is a businessman. Then my client actually refer his staff to me to buy insurance. This staff actually is a young man. He only age of 32 years old. He never purchased any policy. He's a non-smoker because he's very healthy. His daily activity during free time is climbing mountain and diving and swimming. Okay, so we assume he carry a very healthy lifestyle, and he must be a very healthy man, right? So after he purchased a comprehensive policy from me, then 10 months later, one night he called me. He said he's feeling unwell, that he suspected he suffered appendix. Then he would like to admit to hospital. So he called me because he would like to ask whether the 10 months old policy can use or not. Is it effective or not? So I told him, oh, no problem. You can admit to hospital. So the next day, his boss called me because my client actually during that night he admitted hospital. Then immediately straight away he admitted to ICU. He admitted to ICU. So why he admitted to ICU? Because that time the doctor found that actually his oxygen level is very low in his body, that he need a ventilator. So if this scenario happen now, then we will assume that, oh, maybe he suffer COVID-19 now because the oxygen, he cannot breathe by himself, oxygen level is low. Okay, but unfortunately, after 1 week he stay at ICU, the doctor cannot diagnose any specific illnesses and ask him to discharge. So that claim actually cost him about 30,000. And the worst thing is actually that time AIA rejected the guarantee, to decline the guarantee letter, because the policy is still very fresh. We consider very fresh, only 10 months policy, that the insurance company would like to do an investigation. to see whether this is a pre-existing condition or whether he undeclared any of his existing illnesses to the insurance company during the application. So luckily, the boss actually helped him to pay the 30,000 bill to the private hospital. So after that, we submitted the claim. So that time is the first very huge claim to me consider 8 years back. So we are very kanchong for that. So after 1 week later, this client, the claim was not settled yet, but the client admitted to hospital again because due to oxygen level is low, that he fainted at his house. So this round, the doctor actually managed to diagnose the issue because they found out there is a tumor that grow inside one of the blood vessel inside his heart. Means the heart blood vessel grow one tumor that block the blood circulation and block the oxygen that actually bring around his body. So now the doctor said, oh, this is very critical. They got to do open heart surgery to remove the tumor immediately. But imagine, because the first claim, the GL was not issued due to the investigation, and the second admission is related to the first issue, definitely the GL still declined. So all of us, including the patient, the boss, and even me, we are very, very worried because we don't know how much the medical bill will cost for the heart operation. But luckily, at the last minute, the insurance company, they managed to approve the claim because doctor put acute, ACUTE, at the medical report. This acute means it's very out of certain, so no investigation is required. So they approved the second claim, they approved the first claim. So they undergo the operation. So after that, they removed the tumor. The doctor did the biopsy test and found that actually this tumor is a cancerous cell. And the worst thing is, out of certain, this cancerous cell already spread to the lung and liver, and it's already come to the 4th stage of the cancer. So after we claim the medical bills, we claim the critical illness. We make critical illness claim. Okay, so actually the world changed for this young man out of certain just overnight, because from a healthy man, suddenly he become a 4th stage cancer patient. And then he cannot work at all because he got to focus to do his cancer treatment. So luckily, the one lump sum of the critical illness claim that managed to cover his daily expenses and also managed to cover some of his outstanding car loan, that he don't need to worry about the financial. But nevertheless, eventually after 10 months policy in force, then another 10 months fighting for the illness, he passed on. And then we did the death claim for the family. So I really feel that actually insurance is actually can help people in terms of not only money. Actually, sometimes money cannot purchase anything. Money cannot purchase health, but at least during that critical or difficult moments, actually they can focus on their own treatment. No need to already worry about the health status, right? So at least sometimes this money come in actually can help the family or even the patient himself. No need to have the financial burden again. Already very burdened on the health status, but at least there is no financial burden. So lastly, I would like to say risk is always there. Whether you like it or not, its existence is beyond our control. The difference is whether you want your loss to be compensated or not when the risk strike on you. And this is actually within your control. It's your choice. Today, you can choose not to purchase any insurance, that you absorb all your risk by yourself, but you got to prepare for yourself because risk is always there. Thank you. This is my presentation today. Do you have any Q&A? Now we move on to Q&A session. Finish. Sorry, the first time present maybe not so smooth. Any Q&A? If no, we end our session today.
I just now I listened to a presentation. You say 5C, very good. 5C, the 30. I mean, you hear what I say lah. 5C, the certified, competent, caring, compliance, and compensation. I share this. I think one of the session, right?
Yeah. Yeah.
Mm, mm. And then another thing is maybe for insurance companies, maybe you rephrase the term to represent, then we partner with, because normally the tied agent will say represent, so we normally use partner with,
Yeah.
we partner with
Mm.
the insurance companies.
Mm.
I like your story lah. Your story is very powerful.
This is real story, like.
Yeah. That's why your own story is powerful, lor. I mean, talk about the story, people will remember your story. So this is something I learned from you lah today.
Oh, thank you. Yeah.
Anyone that want to actually give some comment to Courtney, or Courtney, maybe you can also do, if you want to, you can actually maybe get feedback from the audience on yeah, sometimes right now it's quite difficult, right? So maybe you can actually get them to send you the feedback, if you can design some feedback form or whatever you want to, or then you can send in the group that whoever listen to your presentation can give you their feedback, then you can improve yourself better. So James said something. James mentioned. James said something. James said, "Don't play. Calm down." Yeah. Okay.
Okay.
Right. Let me see. Anyone? Good job. Okay. Straightforward. Yes. And you managed to cover everything, which I think is excellent. So normally, you do this in have you done this?
Insurance, no, because previously I did this about will and trust, estate planning.
Oh, okay. Okay, so this one actually you can try lah. I mean, know how to try. I mean, nowadays you can use online and you can organize it online. I mean, there's no loss, I mean, last time, let's say not online, you have to think about investment and rental, and then food, then arrangement of people, reservation, all these things. It take a longer time. But with now, because of this, you can, even though after MCO, you can still use the online one. Where people used to stay at home and watch online or attend webinar already. So it's a good opportunity for you to do that and start with maybe this like one of the story that I read yesterday was from a Facebook, one of a friend who is actually in JB. I think you know the person. He's with Rockville, and he conducted the career talk. And initially, when they conducted 2-3 persons, sometimes 1 person, 2 person talk to 1 person for recruitment for the seminar, you see. But after 2 years later, he conducted an online session for many times for these last 2 weeks. And last Saturday or Sunday, their session is 80 old people. But you see, when they started 2 years ago, they run a physical seminars, and only sometimes few people came. Sometimes 1 person only came for the seminars. But they persist on, they continue, they believe that it works, because things is like that. If you continue to do that, one day, why only 5% of people give up is because, no, why only 5% of people successful? Because people give up too early. You get what I mean? So if let's say only a few people start to come, it's natural, because we don't have any brand yet, we don't have any exposure yet. Sure, people, maybe only a few people come to our session, but after a while, when you started and they see people who attended your session, see the value of it, when you start doing again, you can always invite them, because they they know what you do during the seminars. They see the value, they will help to invite. So slowly, if more people come to a session, then more people will help to invite for you. You get what I mean? So when you want to do this, initially there will be maybe the result may be not as, we always hope to have positive result, right? Wow, maybe a lot of people respond and everything. That is natural. But don't expect this will happen. If let's say this happen, everyone can be very successful already, because it's so easy. But it is meant to be like that. It's meant to be so-called difficult. But if you are if you know that, you know, this will happen, for example, you will have that kind of expectation already. Then you accept that every time I do this, it's just a practice for me to see whether my way of maybe a presentation or my way of invitation is the right way or not. Then I improve it, and then more and more people buy in, more and more people buy in, more and more people will help to invite, and more people, and in future your seminar will have more people to attend the session. So the key is you have to start from somewhere. And then people will know about what is risk and what it can cover, and it's quite good in that sense. I mean, for me, I might not be able to structure the presentation in this manner. You see? I mean, I will say that it's quite excellent in that sense that you cover everything in a 1 hour session, but it's also a very layman and easy to understand presentation. So this is something that you have achieved. So you can bring this out to your client or to your prospect now. Okay, that's my view lah. Okay, so I like to encourage you to probably just if not FB Live, maybe do a closed session. Means that invite a few friends and then ask them to invite their friends to attend the Zoom seminars. In that sense. And maybe if you're more ready, we can when we have talk show, we can always invite some of our consultants to be on the talk show to share like the story that you shared just now. Just sharing a story and then bring out the awareness so that people know all about you, and then you can also get people to watch that talk show, for example, and then just about the story. Because the talk show is not suitable or appropriate to do this type of session, because it's like a seminar format. Talk show will be more, you know, talk about, if let's say the story like this will be very, very good, you know. So, but this will give exposure to a consultant. Then from there, when you run your own seminars, you can actually play the video and then invite people to attend the session. So that's how we can do it, you know. Yeah. Okay, so that's all from me. And
Thank you.
Thanks, Conie, so much for your presentation.
Yeah, Brian, pass on to you.
Can. All right, thank you, everyone. That's wraps up our session for this afternoon around.
Okay, tomorrow we will debrief our FB Live for Saturday, and then see what are the strategy that we can use to engage, to continue to follow up the activities. So tomorrow we will do this and hope that y'all can come in, and then we have a fruitful discussion, and then we will set the next call of action for our Money Talk. For this Saturday, Money Talk will be sunny, but the organizer will be Financial Alliance, but your client or your prospect can be also dial in and watch. I mean, it's actually on FB Live under Financial Alliance Facebook. Okay?
Yeah. Sounds
all right, thank you.
All right, thank you, everyone.
Thank you so much, Conie. Thank you. All the best.
Stay safe. Yeah, right. Catch up with you guys again. Thank you. I'll be ending the meeting here. Thank you.